afternoon, everyone. Okay, welcome to our monthly trader talk for the month of May. Okay, all right. Um, okay, let's start with our topic of today. Okay, so basically this is our monthly section whereby we will have this traders talk section with all our followers and with our clients so that we can update them with what are the strategy, what are the current happenings in the markets, and hopefully from the section we will be able to grab some of all these opportunities or even updates to what are the current market situation and how to act on it. Okay, so good afternoon, everyone. My name is Elkie, um and I'm your speaker for today. Okay, for our monthly trader talk. Okay, so a little bit about myself. So I've been in this industry since 2012, and I've been gone through several products from futures to now equities, and also from someone who been focusing on the fundamentals to technical, doing with the props and yeah, so right now I'm teaching, sharing, and also the ideas of trading, and also what are the things to look at with my followers, with my clients, and so on. All right, okay, yeah. So that's a little bit about myself. So what we're gonna talk today is, as usual, we're gonna start with reviewing what happened in the month of April. Okay. After that, we will drill deep into what are the things that are happening right now which currently FBM Calcare rebounded from more than 150 points. Is this a rebound or it's actually a reversal and turning into a bull run already? Okay, and what are the strategy? Is what if we are gonna be more defensive? What are defensive strategy that we are seeing and we have looked into it? Okay, and of course the very last part of the section we're gonna look into some of the seasonality table and also what other things to look at for the month of May 2025. All right. Okay. So let's start to look into the performance of April. Okay. If we look into the month of April, we can see that the top three performance sectors in the month of April turned out to be consumer products, healthcare, and also telecommunications. Okay, so surprisingly, telco hasn't been really performing a lot for I think for more than for consecutive months, and this for the month of April, it turned out to be the one that really most performing. Okay, yeah, and if we are looking at some of the sectors like energy, like transportation, or even technology, these are some of the sectors that haven't been really able to recoup too much of their losses decline in the month of April. They are still quite in some big drag. Okay, but I believe with this last Friday rebounded, technology has improved a little bit more. Okay, but uh, but how's the outlook overall? Okay, so if we look into all the sectors that have been performing, you can see that it's one similarity out of it. Okay, so what are the similarity for consumer products, for healthcare, or even for telecommunication, telco? Okay, you can see these three, they are skewed towards more defensive kind of sectors. Okay, like consumer products, uh, is still consumer products is one of so-called like the recession-proof sector where um, especially on consumer staples parts where even we are facing the worries and even concerns of recession, okay, there will be still demand for all these consumer staples, okay, yeah, and it has been performing much compared to others. One of the reasons is because there could be some of the rush and also the demand from the stocking up action before the the Trump tariff strict tariff kicks in. Okay, yeah. So as for telco, it's a very stable sector with consistent dividend yield. Okay, so I believe that actually created the interest for some applications into the buying, especially when the market was on good selling in early April last month. All right. Okay. So on the other hand, if we look into some of the sectors that actually like all this done from all these top movers, you can see that a lot of companies, Apple technology and companies, um, I will say that it's narrow for the doing, but we know that having by the oil, they transportation low business activities high risk where the money flee out from the sector to something safer assets. Okay, so we can see from the performance, even though we had quite a strong rebound, for example, of Apple, okay, we can see it from the chart over here. You can see that it's selling down, okay, go on until the September, sorry, April 9th. Okay, we had quite a strong positive rebound from 1400 all the way to near to 1550. In fact, on this strong rebound, for past 3 weeks, I'm just although wasn't able to recoup too much of their losses due to the oil price. Yeah, because the oil price is reduced. Okay. So oil price itself is actually um, uh, a benchmark of how the markets, how the businesses they are viewing, how they are looking the outlook for the well, okay. So at this moment of time, um, the view remains this direction. Okay, yeah. So that's why we are seeing that the oil price remains straight. People are not confident that the business activity is going to pick up. Okay, the business activity is going to pick up, and also that uh, the oil price remains weak at the moment. Okay. Okay. So if we are um, looking into FBM daily charts, okay, if you look into the chart wise, okay, we are seeing that after the V-shaped rebound, we can see this is a very sharp rebound that we are seeing right over here from 1400 all the way to 1525, 1530, and even go higher. Okay, this is a very strong reversal signal that we are seeing right over here. But usually after a strong V-shaped rebound, the gain might be unsustainable. Okay? Hence, from technical view wise, although we have a strong signal of 1525 to 1530 resistance level right over here, and this chapter of time, the chances of this breakout to turn into a false break is actually kind of like high, especially the rebound has happened for more than 150 points, and that could be extended. Okay. Similarly, if we look into the FBM small cap wise, we can see that the small cap actually is reaching the resistance area around at 15, 15,600. Okay. All right. So at this point, what we are looking at is although the blue chips index has had a breakout by the end of the April. Okay, we might still see the resistance to come in and continue to cap the upside gain for Malaysia stocks at this point, especially for most of the retailers, we are trading on small cap rather than on the blue chip index, right? Okay, so we can see at this point, the small cap index is actually hitting the resistance, the previous time before the selling down, and we might see some pullback happening. Okay, so for those who are have been missing out the whole rally for the past 2 weeks, I would advise that instead of rushing into buying at this point, you might want to take a back seat and like really ask yourself what's your trading plan, what kind of amount that you are looking into it, and what if this is really the high. Okay, and you might want to control on your risk exposure, the fund allocation, so that if it happens to be like this is the point where we are seeing some resistance and the price really come back lower, do you have enough bullets to add on and add in to grab some at a lower price? So so that would be something that we might really want to consider at this point, especially after 2 weeks or even coming to 3 weeks kind of rebound. Okay, yeah. So as of for the two most important commodities in Malaysia, if we look into CPO, the palm oil prices, the palm oil futures CPO, okay, we can see that CPO is going on a downtrend and it has broke the 4,000 level support and it continued to trend lower. Okay, so that's why that actually take off the interest, the trading interest in plantation counters at this point, despite that we are seeing plantation count sector is actually some of the counters they prone to be a cash cow and they have been giving consistent good dividends. Okay, but at this point with the CPO prices has been coming down, we might don't want to engage with the plantation counter so soon. Okay, for the CPO price, we might continue to see the selling towards 3,600 to 3,700 at this juncture of time, at this juncture. Okay. As for Brent crude, we have mentioned just now, the oil price outlook remains weak, and also we can see in the month of September the rebound. It tried to have it tried to rebound. It tried to rebound in conjunction with the rebound in the equities. Okay, after Trump announced the 90 days cooling period. Okay, however, we can see that when it comes to the near to 69 bucks area for the Brent crude, it just cannot cut through, and from that it actually form a reversal and come back lower. Okay, and moreover, over the weekend we are seeing OPEC plus countries, they are announcing that they're gonna continue to increase their supply, which that's even drive down the oil price lower today. Okay, yeah. So like I mentioned just now, the stock market, after the tumble for the early of the April, the stock market actually rebounded after Trump has announced a 90-day pause on its sweep tariff. Okay, and if we look into world major indexes and of I also included FBM KLCI right over here. We can see most of the index, they are moving in the same way, same trend, whereby it is forming a V-shaped rebound over here that we are seeing. Okay, so the blue color is our FBM KLCI. Okay, so in comparison to others, we can see that some of the indexes like Hang Seng, like Hang Seng, they might still have some a little bit upsides. DAX is pretty much almost back to the high. For the Nasdaq, is just slightly near, very, very near to the high. Dow Jones indexes is still a little bit of space. FTSE is has coming to near to the high. Ours is actually also hitting the rebound high already, and also very similarly to the Nikkei 225 as well. Okay, so we can see that most of the indexes, they have recovered the losses, and also they are rebounding near to the recent high. Okay, so for technical players, technical traders, will they be taking some profits? So that is something that we might really want to consider and think about it before we really want to engage the money. Okay, so again, we want to ask ourselves: is this reversal is a bull run, or it's just a dead cat bounce before we are seeing a deeper selling down? Okay, so there are a few questions that we can ask ourselves. Okay, So with this rebound, is the thing is all these issues that have been mentioned has been putting up. Is it getting better, or the market is just rebounding on a glimpse of hope? Okay, where this hope, this so-called the imaginary events, the positive event, it can be collapsed anytime with maybe just a line or a sentence, a statement from Trump or from President Xi. Okay, so this is something that we really have to sit down and think about it. Is this rebound solid or not? Okay, then what is actually happening right over here with the rebound? Are we updated with what's happening? Okay, and of course we don't want to just think and um, talk about it, but we also want to like really lay down the plan. What are the risks and the rewards that we might able to get from all these consecutive events? Because we can't just sit right over here and wait until the whole event's over, and by that time, um, the price when the events are over, the price should be back to their normal or even going higher, because from there the risk factors has been removed. Everyone is seeing the economy gonna grow, and hence the price could have been elevated. Elevated. Okay, yeah. So from here, we definitely want to lay down what are the potential risks and whether should we be taking the risk or not. Okay, uh, uh, as for those that who have been trading, we know that the higher the risk it is, the better the reward it will be. Yeah, so called high risk, high reward. Okay, so very first thing is let's look into this U.S.-China trade war, or even U.S. versus the all nations trade war. Okay, yeah. So for those who have been updating and looking at what's happening, okay, from my perspective, is things were actually left hanging, and we are not seeing that to a settlement at this point. Okay, although that Trump has been claiming China presidency, calling him, and they have been laying down trades and plans, all this, even during his interview. Okay, but we are seeing that that there were flip flops in all these statements, whereby China actually rejects Trump claims, and also eventually, then later we have some media saying that U.S. has reached out, and even China also saying that they are judging and evaluating if that is a possible trade talks can happen over the weekend. Yeah, okay, you can see it's that the article is on Friday. Okay, however, we can see that before any of the concrete plans or any details of all this plan or negotiations been released out, we are seeing that Trump still continue to carry on with his tariff plans, where just this morning he actually has just announced that he is planning for 100% tariff on movies, that's non-US movies. Okay, so we can see that this tariff thought hasn't been going too far away, or hasn't been left behind Trump's mind. Okay, yeah. So very good likelihood that after this 90 days of the cooling period, or even before that, we might see some changes, or even Trump might just carry on with the tariff that he has been proposing or using as a tool to make negotiations or even some deals. Yeah, but very good chances that tariff it will carry on, but the problem is how much and which country will be able to enjoy from it. Okay, yeah, and also during this period of time, we are seeing that U.S. GDP has contracted for the first time since 2022. But in the month of April, the inflation readings, the CPI data, it remains soft, still within controllable manner, while the jobs data released on last Friday remains healthy. Okay, so what are all this economic data telling us actually? Okay, so if we look into the GDP growth, it contracted by annualized 0.3%, and this is the first time since 2012 does this indicate that the impact from tariff has been kicking in? I would say that this is the side effects of the tariff talks, okay, but it's not yet really reflecting the business economy and the business activity and also the economy well-being in the US yet with this contraction. Okay, one of the main reason that brought down the GDP readings is because there is an extraordinary increase in the US trade deficit. So what does US trade deficit it means? US trade deficit, it means that the import is higher than the value of exporting goods. Okay, so what is actually happening right now is US companies they are actually rushing to buy goods. They are rushing to stocking up all these products that could be facing the increase in the pricing or facing the tariff charges, a high one, especially after the 90 days cooling periods. So they are buying all this so that they can keep their profit margins, they can keep the price still over some time after the cooling periods. Okay, so this is what actually happening. What we are seeing is imports could be increasing, especially those products that US unable to produce by themselves. Okay, for example, like one of the good example is like coffee. Okay, so the US could be importing some of the coffee beans, or even they will try to look for alternative, because coffee bean they might have the issue of the storing issue. Okay, but these are some of the products, some of the incidents and events that is happening in US. They are stocking up. Okay, yeah. So with all this stocking up, it could create a short-term boost in for some of these companies that exporting their goods to US, where like what we were seeing happens in the glove counters, okay, whereby US companies they actually stock up their glove inventory for 6 months, okay, in the month of December last year, before the Chinese tariff on the tariff on the Chinese glove kick in. Okay, yeah. So what will this bring is, after this stocking up period is over, for all these exporting companies that has been exporting at extraordinary higher volume at this point, they will be suffering for a period, maybe 3 months, maybe 6 months, a period whereby their sales gonna drop drastically, because US parties has done stocking up. They have to cut down on their productions. They are not receiving much orders for the next 6 months. They have to suffer through this. Okay, so we might see some boost in their earnings in the month of May, or even for the next quarter, but it might be unsustainable. Okay, so this should be the outlook that we are forming in our minds. Okay, and we have to be like really careful if we are trading on quarterly earnings. Okay, then we have to ask ourselves, which are those companies that are exporting to US, and the goods can they can stock up, they can keep the goods, and probably maybe up to 3 to 6 months or even longer. Okay, and the next one, the next implication of all this economy data is it will be about Feds. Okay, Federal Reserve is kickstarting their FOMC, their monetary meetings this week, or starting in Tuesday, and normally for Feds, they will be making the decision whether to cut rate or not, or to maintain. Okay, based on mainly two factors, two indicators, which is the number of jobs. Okay, number of new jobs, based on the job data, the unemployment rates, and then another one is the inflations. Whether are we seeing a high inflation rates or even deflation. Okay, so Fed has been talking about keeping the rates on hold amidst all this turbulence, economic turbulence that we are experiencing from Trump tariff. They are delaying the rate cuts. Okay, previously, Fed has been implementing rate cuts to bring down the inflations, okay, to boost the economy, okay. But at this point, with the inflation rate remains soft, remains within so-called Fed's expectations, and we are not seeing huge impact on the job data yet. So for this month, for this week, the interest rate decision is likely to remain unchanged. They are expected to hold the interest rate as it is. Okay, despite that, President Trump has been keep on pressuring for a rate cut. Okay, to so that it can tame the inflations, the potential inflations rate of inflation hike resulting from the tariff policy that Trump has been putting on. Okay, so from right over here, we can see that I believe many of you guys do notice that this is very in line with what market expectation. Market has been expecting that rate gonna stay still, and also the inflation gonna be coming. The inflation is gonna go higher with the tariff, with the ongoing tariff policies. Okay, but we are yet to see all this happening. Okay, so all this, it could happen slightly later, maybe in the month of June or even in the second half of 2025. Okay, so you can see that even President Trump is expecting that the inflation gonna happen, and whether the labor market will able to stay healthy at that point of time, that would be a very big question mark. Okay, especially if the inflations it happened without Feds making a quick actions, then that could bring the economy, active business activities, economy conditions to go down lower into a slower growth mode. Okay, and that from there, then it could affect the labor markets. Okay, yeah, so these are some of the hidden, not to say hidden, but these are some of the uncertainties and also the downside that the market has been putting behind their mind at this, behind their head at this moment, and cheering for the rebound in the market. But as if we are looking in a longer term period, a positioning period, then these are some of the factors that we really want to put up and analyze it, and including all these factors into our decision making. Okay, yeah, so what are the risks and rewards at this point? Okay, so we have been talking about some of these factors, some of this view of the markets, and we do really we have to admit that the market volatility and uncertainties, it's likely to remain, and the possibility of reaching a near-term deal between China and also US, it could be really difficult at this time. At least we are not seeing anyone has been backing off. Both parties has been waiting each other to be the first one to make an offer, or even to try to talk to the other party. Okay, even though US has been trying to hinting and trying to lure Chinese side to talk to them, but at this point we are seeing that China is taking a very strong and a very strong stance, and very defensive with what is happening. Their response towards Trump's trade policy. Okay, so no doubt these are the uncertainties, the risks that's lying in the markets. Okay, hence how can we then the next question is how can we uh, handle this risk? Okay, so one of the way, so this is just my personal opinion, so one of the way that we can do it is we can look into some of the products in the market, for example, some put warrants, or some put warrant, let it be for the US indexes or even local indexes, to create small exposure on all these put warrants so that it can become a hedging tool to you, to your portfolio, so that if really when everything is so bullish, so rosy at this point, uh, uh, this could be a good time to create a small hedging tool to put up to against the potential volatilities that could be arising anytime. Or okay, yeah. So with this mindset, putting up when even when the markets really come back to, downwards, or on retracement, the damage on your portfolio or on your profile, it could be lesser, and also slightly slightly wider, and also slightly covered by some of the gains that you're able to be obtained from this part of the hedging tools that you are putting at it. Okay. As for the buying sides, as for the equity sides, okay, we know that just now we have discussed that US has been importing ahead of the SWIFT tariff. So we can expect that some of these exporting counters, they might be able to benefit from this aspect, okay, especially some of the raw materials that they have been exporting out. It doesn't necessarily have to be in US as the final destination, whereby, for example, US can be importing let's say for products A from let's say from Europe, or from Canada, or from Brazil, or what, okay. And eventually, with the increase of the volume of the importing by US, okay, that actually creates and lift up the pricing of the raw materials, okay. So overall, for even though we are not exporting to US, we are exporting maybe to China or to Europe, okay, with a higher price that being lifted up on this higher US imports, that actually will benefit our exporting parties as our exporting company as well. Okay, but do bear in mind that this is very good, very likely to be a temporary short-term impact. Okay, and after that, they might have to suffer from the drag on the material prices, and also the number of the imports value. Okay, so if you're trading on this, then you might really want to do it in a shorter term horizon. Okay, and another one is with all this tariff going on, we are seeing the depreciation in the dollars, hence the strengthening in the ringgit as well. And also, amid the strengthening in the ringgit, we are also seeing foreign funds actually recording inflow, the first time since September 2024 last year. Okay, so if you're interested, you can always check out these weekly fund flow reports that they are released. MIDF is releasing every week. Okay, and these are some of the stocks that foreign funds have been foreign participations has been buying for the last week. Okay, and we can see of course they're gonna focus on the blue chips, and the main one will be Maybank and also CMB, and of course with the nugget as well. Okay, while for those that have been selling will be more towards Bursa, IGM, PCAM. So these are some of the directions and also the interest of the foreign funds as foreign funds come back in. Okay, so other than that, we are seeing that if we look into the USD MRL chart, we can see that last year, since August to the end of September, we are seeing the strengthening in the ringgit, and actually that helped the FVM KLCI to trade higher. Okay, and very similarly, as the ringgit has been strengthening in the month of April, we are also seeing the jump in the FVM KLCI, the blue chips index, as well as funds has been coming back in. Okay, but bear in mind that we are reaching near the low of the September last year. Okay, so the downside is quite limited at this point. It could be limited, okay, but knowing all this, who are those beneficiary of a stronger MYR? So basically, we are looking two type of stocks, two type of company. One, it will be the consumer sector, especially those that gonna be benefiting from lower cost because they are importing some of these raw materials, like let's say for example automotive, like Tanchong, like maybe Sime Davi, okay, and also some of the consumer counters like other consumer counters like Mr. DIY. It could be, yeah, okay. So some of these companies, they have been importing their products or their raw materials from outside Malaysia. They could be benefited from a stronger ringgit. Okay. Other than that, it will be on some of these companies that they are having a high USD denominated borrowings, whereby they will be able to save on their interest expenses. Okay, yeah. So with this strengthening in the ringgit in the month of April, or even it might prolong, then we will be seeing that this gonna be gonna be shown in the the QR in the month of April. Okay, but we do not need to wait until the QR to be released in not April, in August to take action. But during current time to the month of August, we can't, based on the technical reading, based on the performance of the market, and start doing accumulations ahead of the results that going to be released in the month of August for those that benefiting from a stronger ringgit. Okay, yeah. So yep. Okay, so for some of you guys that who are really interested in this strategy, the defensive strategy, to accumulate some of this, at if we are seeing any selling downs from right now until the month of August. Okay, so these are some of the the previous articles that have been highlighting about the potential opportunities in the ringgit. Okay, so we can see that the Star actually has this article talking about the beneficiary from the ringgit, and they have reported in their earnings, okay, in the month of November, which we were seeing the impact happen in August to September last year. Okay, yeah. So some of them, they are like Capital A, TNB, Aseta. So you're able to pick up some of this good one, especially those blue chips, to buy in and just accumulate when the pricing, the valuation is cheap. Especially if we are still seeing some heightening volatility or even some uncertainty led kind of selling down happening in the month of May or even in June. Okay, yeah, because if we are looking into the seasonal, if we are looking into a seasonal chart wise, we can see that the seasonally May is actually a much weaker month. So in the market, there has been saying sell in May, go away, and come back in the month of July. Okay, so May and June we might experience more selling pressure, potential selling down, or even so-called potential profit taking after 150 points rally in the index. Okay, so this could be a good time for you to consider whether you want to employ this strategy that we are talking about to collect some of this beneficiary from a stronger ringgit and hold it through the month of until the month of August. Okay, yeah. So if we look into some of these sectors that we have been talking about, like the consumer products, we can see that consumer products also has been rebounding from 460 to more than 500, and there's still some upside to 520. Okay, so if you are trading along with it, there's still some space for short-term trading, and you might able to really want to take profit as it approaching 520 and above. Okay, but if we are looking at utilities wise, we can see that it has reached the high of 1640, and today is forming a potential shooting star. Okay, hence utilities we might really want to be more conservative at this time. Okay. Similarly, on healthcare wise, we can see the rebound in the healthcare is much milder compared to the other two indexes, whereby if we are seeing healthcare able to hold on above 1900s and continue to show some buying interest, we might continue to see some interest in the healthcare as well. Okay. Similarly, on telco, it reached this high, but is staggering above 20 days moving average, and a rebound right over here, we might see a continuation buying. Okay, yeah. So among all consumer products, might continue to have a short-term rally at this point, where healthcare we might see a potential bounce and also a continuation buying. Okay, whereby we will be more conservative on the utilities and also the telco at this juncture. Okay, and besides looking into that strategy, another way is another way looking at the things is we might really want to continue to remind ourselves we always want to sell high and buy low. Everyone has been talking about when I come into the stock markets, I always want to buy low, sell high, buy low, sell high. But at this point, after the index has rebounded for more than 150 points, and we can see a lot of all these stocks, they have come to a near-term high, near-term resistance, technical resistance. Is this the high that we are looking to sell some and also buy and also keep some cash to buy lower? Okay, over the weekend, we can see Warren Buffett's they remain conservative at this point, and also it has been increasing their cash holding under Berkshire Hathaway. Okay, so this could be another defensive strategy or actions to be considered at this point, whereby if you want to see that this is a good time to take some of the profits, and especially we know that seasonality May could be a weaker month. Okay, so you might really want to take some of the profits, or even create some small exposure on the put warrants, or even reduce exposure and create some exposure on the put warrants, or even some bear ETF or what. Okay, so for all these other products, if you do not know how to do it, okay, please don't do it easily. Okay, you can always feel free to contact us and get our advice on what are some of the warrants or what are some of the products that is good if you really want to look into the hedging aspect of the markets. Okay, because warrants, structural warrants, all these put warrants, call warrants, they are structural products, and it can go to zero. Okay, for the so-called investment. Okay, so please do not do it without knowing the products. Okay, feel free to contact us, and also we can go through it with you so that you can really understand what are the things that you're buying and what kind of exposure that you should be creating. Okay, usually for hedging, the exposure, the risk exposure they are creating for hedging, it will be much lower. Usually not more than 25%. They will try to keep 10 to 20% or not even 50%. Okay, and on the seasonality wise, we can see that the as mentioned earlier, usually you are seeing sell in May, go away. A lot of sectors historically, seasonally, they are in red for the month of May, except for healthcare. Okay, so just now from the index chart, we also can see that healthcare, there are still some upside to be seen potentially after some mild pullback and continue to rebound. Okay, so that is something that we might really want to look into. And if you play back on the foreign funds inflow, healthcare counters, one of them, it will be IHH. Okay. And not to forget, the month of May is also a QR month, quarterly earnings month, whereby we have this continuous growth over 5 quarters that we have been offering and putting up for our clients, or for our clients to view and try to grab some of the counters that could be potentially announce good results. Okay, so we can see there are 7 counters in our top 10 list of this continuous growth, and they're gonna report their result in the month of May. Okay, yeah, so like Versatile, M Cleans, SCG Berhards, they have been in the list for a few months already. They have been reporting strong earnings, and it could be remain the same for this month. Okay, but do bear in mind that you really don't want to wait until the earnings to be out, then only you go in and buy, and by that time you might be buying at the gap up price. Okay, do employ the technical readings, or looking for employ bottom fishing strategy, or just small positions if you are seeing good opportunity to buy for any of these counters. Okay, yep. All right. So if after the section, if you have any questions about the hedging, about how the bottom fishing strategy on to pick up some of these earnings stocks, or even to know what are the rest of the consumer stocks, or even US borrowing stocks that you will be interested, do feel free to contact our team to know more. Okay, you can find our number right over here, and these are our social media whereby you can contact us through as well. Okay, do feel free to scan the QR and to keep in touch with us. All right. Okay, so that will be all for our section for today. Okay, if you have any questions, do feel free to type in the chat box, or even drop us a message on WhatsApp, let it be WhatsApp, or at our social media, the Facebook Messenger, or even on the YouTube. Okay, and then we will try to attend to you as soon as possible. Okay, if there is no questions, then we shall see again next month on the monthly trader stock in June. Thank you very much, and good luck trading, everyone. Thank you.